The Japanese markets are leading the gains, though. The Nikkei is trading with gains of 1.5%.
The Nifty has been in this narrow range between 24,500 and 24,850.
Bulk of the issue has to do with the increase in oil prices, which a lot of industries are facing.
I mean, we've got unchanged. I mean, 3-4 point change on the Nifty.
If I was thinking of any one sector to lead, it would be capital goods.
US healthcare is a $4.8 trillion industry.
We'll build businesses, we'll invest in them. When they grow up, we'll invest into other businesses.
The Nifty is down 50, the sensex is down close to about 100 odd points.
They have increased their stake in Zomato during the month of November.
We think that the second quarter slowdown is purely a data artifact.
The November inflation will be 5.5, which will be a relief.
Just keeping an eye out on the Nifty because, this 24,515 mark seems to be a bit of a support ahead of the weekly options expiry.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, this is the last hour of trade coming up. Markets are down about 80 points. We're at about 24,550. So actually, as we sort of wrap up this Thursday, we're at the lower bound of what has been this range, 24,500 to about 24,850. This is Closing Bell. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, hi, good afternoon.
Hi, good afternoon. It's not a big fall, but we're just grinding lower, you know, through the course of the day.
Yeah, absolutely. I mean, it's been a sort of slightly lower day. By the way, the big headline is playing out in international markets with the Swiss National Bank cutting interest rates. They were expected to cut by 25 bips. They've done 50 bips. So that's, a separate headline on the global front. But for us, I think it's this expiry that that's going to keep people occupied for the next 1 hour.
And so far, it's been orderly. I mean, there's not been very much. It's been down, but it's been orderly. When you said big news, I thought you were talking about the One Nation.
Yes, that too. Of course, huge.
And, we should spend some time talking about this in terms of, implications. A lot of interest around this. The cabinet, I think, has cleared that bill. At least that's essentially what the flash suggested. And we'll have more on that. But a minute or so on what's going on the market right now. So Nifty is down about 1/3%. That's basically 80 odd points. The Nifty Bank is down about 1/3%. That on the Nifty Bank is about 150 points. And I think you've got the small and the mid-cap indices, which are also down. The small cap index is losing about 1. Mid-cap index is down a little less as compared to what the small caps are doing. Market breadth, consequently, is a little negative. And FMCG is the top loser. It's down about 1% sectorally speaking. Actually, the media index is the biggest loser, but I mean, it's got fewer constituents and even lesser weight. So media, FMCG, and you got the PSC space, PSC and CPSE space, which are down about 0.91% as well. So just a little bit of color as far as the overall markets are concerned. Reema.
Well, FMCG is down. That's the worst performing sectoral index. That's down close to about 1%. So after the Monday's gash, it tried recovering over the last 2 days. But today, once again, it's come under pressure. So that's down nearly 1%. On the way up, IT continues to see a lot of buying. The Nifty IT index is up 0.8% for the day. For the week so far, it's 2.25% higher. For the month, it's 6%. And now the year-to-date gain for the Nifty IT index is close to about 29%, with names like Persistent briefly hitting their 1 lakh crore market capitalization. IT has been up and away. Outside of that, Adani Group stocks have also seen a lot of buying. So the top Nifty gainer today is Adani Enterprises. That's up. That's the only index stock which is up more than 2%. Adani Ports is higher. But outside of that, Adani Total Gas, Adani Power, across the board, these stocks are quite buoyant.
Yeah, they've done fairly well, the group as a whole. But, otherwise, it's one of those rare days where you're seeing a bit of a mid-cap cool-off. Mid-cap index is falling more than Nifty at this point in time. And just to name a couple of stocks, Bajaj Housing, where the post-IPO lock-in partially ended today for a certain set of investors. That's where there's additional supply in the market, 6% down on that stock. There's Concord, which has been reacting negatively to a Goldman Sachs report. Goldman Sachs is not too upbeat about the prospects for some of the logistics providers like Concord. There's Nalco, which Nigel will tell us more about. because of some international developments on the alumina front and concern about whether the recent hike in alumina prices, whether some of that gets rolled back or not. That concern is weighing on Nalco. It's had a great, of course, run up. And then you have names like Nuvama Wealth. Because of the block trade action, there's been some pressure on that stock. So again, one of those rare occasions where you're seeing a bit of a cool off in mid caps as well. By the way, beyond the stock action, the one other big headline continues to come in from the CEA, the Chief Economic Advisor, where I don't know, guys, if you saw some of the flashes, because he's categorically going on and saying that the Q2 growth numbers are likely to be revised higher. He's again making that point that this is probably not as bad as it was appearing in the first instance, and subsequent data could lead to upward revisions as well. So let's see. The markets, of course, parsing over those comments as well. What about trades then? For the last hour, we have Nagaraj Shetty joining in with some thoughts and ideas. Nagaraj, great to have you on. What's your take on the index and, of course, the individual stock trades you have?
Hi, good afternoon, Surbhi. Nifty has been in a consolidation moment over the last 4-5 sessions after a sharp upside bounce. The overall chart pattern, near-term trend remains positive for the market. We have seen a significant upside bounces from the lower levels from near 23,200 odd levels, and market is currently holding on the support. I'm not expecting any bigger decline from here onwards. At lower levels, 24,500, 24,400 is going to be a strong support for the market. Even though if Nifty declines down to that level in the next 1 or 2 sessions, I'm expecting a sharp upside bounce from the lower onwards, and that could eventually break above the initial hurdle of around 24,900 levels. So on that front, I have 2 stocks from the mid-cap segments. First one is BDL, Bharat Dynamics Limited. Chartically, if you look at after a sustained downtrend over the last many months, this stock has witnessed a sustainable upside bounce from near 920, 930 odd levels and has been continuously moving on. Currently showing range-bound action over the last 4 sessions and making an attempt to break above the range around 1230, 1240 levels. The overall chart pattern is looking positive for BDL. I'm expecting this to move up further. One can look to buy around current market price 1226 levels. The initial upside target would be around 1300, and one can place a stop loss at 1190. Second one is from real estate front, Anantraj. Anantraj has been in a range-bound action. Recently, it made an attempt to a downside breakout of the range, bounce back in today's session. Overall chart pattern is looking positive. Volume is breaking out on the upside breakout. I'm expecting more upside in this counter. The next upside target to be watched is around 810. One can look to buy at this point of time, currently trading around 755, 756, and one can place a stop loss at 725.
Thank you. What a good year. Anantraj has had 150% higher. And, the target prices set are much higher at about 800, 810. And on the Nifty per se, our expert at least doesn't see lower levels. Not too much from here. 24,400 to 24,500 should act as an important support. Let's get you an exclusive now. We learned from sources that the IRDAI may look to bring regulations to limit over-dependence on parent bank in bank assurance business. Yash joins in with the details. Yash.
Well, the story is largely a continuation of the template that CNBC-TV18 had reported a couple of weeks ago. As far as the insurance regulator, that is IRDAI, is concerned, there are 2 sets of concern here for the regulator. One is the share of, one distribution channel in the overall business of life insurance companies. And the second concern is the share of parent bank when it comes to the bank assurance pie of the life insurance subsidiary of that parent bank. Speaking about the latter first, here what we are given to understand is that the insurance regulator, IRDAI, may look to form regulations when it comes to limiting the share of parent bank as far as the total bank assurance pie is concerned for the life insurance subsidiary. Here, the regulator could also look at first bringing out a draft exposure or a consultation paper, take the views of the various stakeholders before any regulations are formed. What does the regulator feel here? Here, IRDAI feels that the insurer should not use the channel of their parent bank in perpetuity, and the regulator wants life insurance companies to tie up with more banks and not just the parent bank. On the second part, the regulator is also concerned about share of one distribution channel out of the total business that the life insurance company receives. Here the regulator is of the view that there should be diversification when it comes to the distribution channels amongst various distribution channels, and there shouldn't be a concentration as far as one particular distribution channel is concerned.
Well, this is a story that we had reported first on the 28th of November. At that point, we had essentially said that the regulator, IRDAI, is basically, likely nudging insurance companies to reduce their dependence on bank assurance as a channel and also parent banks. And of course, now this is sort of, coming through again, source-based, but this is coming in from, top sources that the regulator will probably come out with sort of a consultation paper with proposals, which then will be deliberated upon, and then perhaps final regulations will be formed. I mean, look at something like an HDFC Life, it sort of just went one way, no recovery after over the last many weeks now, and there's been none so far. I think if anything, they've gone down a little bit more post this story. Well, Devin Choksi is with us, MD at DR Choksi FinServ. Devin, good to have you with us here. Thank you for your time. Just your thoughts, Devin, on insurance as a space, and this is in a way not complete confirmation, because at the end of the day, this is still source-based, but sort of in some way at least reaffirming that this is essentially what the regulator wants: lesser dependence on bank assurance and lesser dependent on parent banks. In terms of insurance growth rates, the assumption or the reading from insurance analysts has been that this is not great news. Your thoughts, Devin?
Yeah, Prashant, good afternoon. Well, I don't know. I think it will completely hamper the selling of insurance products. I am not too sure on that aspect. But my understanding is that most of the life insurance companies in particular, they have aligned themselves, to the larger part of the requirement of the market. Majority of the product providers are focusing on term insurance, where probably the premium collection is less. Life insured is on a higher side. At the same time, they get more number of customers participating in it. Vis-a-vis the saving link plans, which are not probably, remaining a focus area, including for LIC. So in my viewpoint, that probably augurs well, because over there the commission paid also is less, and that would probably have relatively better impact on the profit line performance of the insurance companies. So on fundamental side, the companies like SBI Life, companies like HDFC Life, even LIC, they have got a proper product mix in my viewpoint, and that's where probably they are relatively safer bet compared to many others who are purely focusing on pushing their products through the bank insurance channel. So they may probably get affected, but beyond a point, some of the larger ones, I don't think that they are getting affected because of any such kind of regulations that we are talking.
Okay, let's get to the other big, stock in focus, Nalco. That's down quite a bit. Nigel, what's happening here?
Well, Nalco, the stock has seen a big rally in the last month and a half or thereabouts. That's because Nalco is more sensitive to alumina prices rather than aluminium prices. So that's where we saw that alumina prices moved up. The stock had rallied as well. However, there is some weakness on alumina prices, which has led Nalco to see some kind of profit taking. Let's give you a couple of details. Alumina prices, they move from around $600 per ton all the way to $800, $820 per ton. What's happened the last couple of sessions is that the alumina prices have come down closer to around $700 per ton. Why did this happen? A couple of factors at play. One is Chinese aluminium smelters, they have been finding the alumina prices very, very high. And as we know, demand is not very, very strong. So various aluminium smelters, they have been shutting down, which means the demand for alumina goes down because you take alumina and then you make aluminium. The other factor that's happened in the last 24 hours or so is that Australian miner South 32, they have gone ahead and they've withdrawn their guidance from their aluminium smelter, which is in Mozambique. That's because of the unrest and the political unrest that's currently prevalent in Mozambique. So roughly, they were earlier guiding for around 3.5 lakh tons of aluminium. Now they've withdrawn this guidance, so we'll have to wait by to see what is the revised guidance. But what that means is, if 3.5 lakh tons of aluminium goes out of the system, means that the demand for around 7 lakh tons of alumina goes out of the system. So that deficit, which was in that vicinity of around 1.5 million tons of alumina, that will come down substantially. Keep in mind, Nalco is also looking at commissioning an alumina smelter, an alumina refinery in the coming year or so. That's around 1 million tons or thereabouts. But that's the trigger going ahead. In the near term, the street is a little bit nervous because alumina prices have corrected. But you also need to keep in mind that most on the street are working with elevated alumina prices in comparison to the average that we've seen in the last 10 years or so. So that's the reason that Nalco has come in for profit taking, because alumina prices have seen some bit of correction. And it appears now the deficit number that the street was working with globally with regard to alumina may not be as big as earlier envisaged.
Okay, all right, Nigel, got it. Thank you so much for that. Let's actually discuss this further with Deven. Deven, good afternoon. Good to have you on the show. So, big reaction playing out on Nalco today. What is your sort of overall perspective on it? Because the expectation from the aluminum and alumina market have been very, very firm. This is the first, so to speak, hiccup that we're seeing in a while now. What's your call on the stock?
Yeah, good afternoon, Sylvie. Well, I think Nigel has summed it up well, I think, on the issues which are basically affecting the business of the company. Now, what I'm not completely sure about, I think, is whether this is a temporary phenomena or this is going to be a long-lasting phenomena. If it is a temporary phenomena, then probably I think it is best left to the market volatility, and one can take a view based on that. As of now, I think our view is very simple. Both ferrous as well as non-ferrous metal, I think we see the surge in demand coming in the 2025. And we believe that I think this demand will probably firm up the prices eventually on two counts. One, because of the war-related situation coming down and the reconstruction-related activity started to happening in different parts of the world, particularly war-affected areas. I would think that I think the higher amount of demand for the metal would probably be the reality, and that will probably continue for 2 to 5 years as I see it. On the other side, the mix, the energy mix, which is basically being talked about by most of the manufacturers, the fossil fuel-led energy generated as well as I think the renewable energy generated, I guess I think the energy cost per se is coming down in a systematic manner, and that would be reality over also next 3 to 5 years. So given the structural change which is happening into the metal commodity business, I would tend to believe that I think overall there should be an upside move happening into majority of the businesses, I think, in the metal segment. However, I think since they are commodity driven, the volatility would be always high. So from that perspective, the best time to buy would be when the market is negative about, or the perception is negative about this business.
Okay. By the way, news coming in, the IEA, International Energy Agency, has cut global oil demand growth forecast or estimate. So not great news coming in from a demand point of view. And the growth outlook globally. But moving on, logistic companies Concor and Delivery are also in focus. And here there are some fresh brokerage commentary coming through. Mangalam is here for more. Mangalam.
Well, negative on Container Corp and positive on Delivery are the brokerage comments coming in. If you look at Container Corp, it's corrected a bit from the highs, but at the same time, we have Goldman Sachs, which believes that there could be further downside on Container Corp. Why is that? Because remember, the first half of this year, their volumes grew by just about 6%, and they believe that, October, November as well, it hasn't been any different, and that puts to risk that 18% sort of volume growth target for this entire year. And they also believe that, the company is losing some sort of market share when it comes to competitive activity as well. So with all these things, they believe that, the risks for downsides are a lot more. So they already had a sell rating and an 810 rupee target price. That's further pared down to 710. And alongside that, they believe that the earnings downgrade for the company could continue itself. That's about Container Corp, down 4% as we speak. The other stock which is on our radar is Delivery, where, Macquarie met the management. They have an outperform rating on the stock. Delivery actually, as per the company, handles about 200 basis points of India's GDP when it comes to the logistics share. And at the same time, they believe that, they have a fair amount of moat to go ahead and increase their market share in, the e-commerce space. And speaking about e-commerce itself, they believe that, the quick commerce threat for e-commerce logistics itself is kind of overblown. And even if there is some sort of threat, they do have enough cash. Close to around $650 million as cash is a strong strategic moat. And, we have Macquarie, which has a target price of close to around 460 rupees on the stock. That stock's holding mildly in the green, but in an otherwise wobbly market for the mid-cap end of things, the stock is outperforming.
Thank you very much for that. They've been coming on Delivery. The IPO price was closer to 500. The stock didn't do too much. But now of late, you are seeing some recovery. But as Mangalam said, one of the big concerns on the street is this impact of quick commerce and whether they'll take away share from the kind of business e-commerce companies give to delivery. Where do you stand on it?
Well, I think my understanding, Rima, on the subject after discussing with various companies, these logistic companies definitely, I think, are the squeeze one. They are the sandwich players, actually, in a way. Because on one side, I think they have a higher demand. On the other side, I think they have got higher amount of cost pressures. So in order to meet, I think, the demand at a competitive price, that's a challenge. And what one has seen in this particular company's case, that over a period of, I think, last few quarters since it is listed, I think the result has been, I think, inconsistent with probably the business. I think on the top line, the growth is being found, but the result, I think the EBITDA level margins, etc., I think they are remaining quite compressed and challenging. So till the time I think you find the sustainability factor established in this particular activity, maybe immediate confidence level will not be very high to buy this particular company. Remember one thing, that I think already putting it around 28-30,000 crore worth of market cap and not making money, or not making enough money probably. So I think that would be the concern that I would have. I think remaining confident about, I think, the demand scenario for the business, not too sure about the margin and the profit scenario for this company.
Okay. All right, Devin. Good to get that perspective from you today. Thank you very much for joining in and discussing a lot of those topics, themes and stocks with us. You have a good rest of the day. We'll take a break right now, come back on the other side, and Abhiram Elswarupu of BNP Paribas will join in with some market thoughts.
Okay, well, the market, of course, is lower, about 1/3%, no big change there. The Adani Group stocks, of course, have been rallying from the first half on, and they're all higher at the bottom of the screen, many of these names there. The big, of course, political story which came through, which was flashing as we started the show at about 2:30, is the one about one nation, one vote. Sources tell CNN News 18 that the Union Cabinet has cleared the bill for one nation, one election. Payal Mehta now joins in to put this in context. Payal, good afternoon. Tell us more.
Of course, the cabinet today has in fact given its approval to the One Nation, One Election bill. That has been a pending reform that the Prime Minister has been speaking about, and nobody had the political courage to really get this done. This is, of course, after the cabinet recently adopted the Ramnath Kovind report, and we are given to understand that it will be one comprehensive bill. And what we also do understand by way of top government sources is that the bill will be introduced in Parliament this very session. So possibly sometime next week, the bill could be introduced in Lok Sabha. And once the bill is introduced, we are given to understand that this will be sent for Parliament scrutiny, because there's a wider consensus which is required for this, not just for the numbers, but also to instill a sense in people that this is an exercise which is going to be extremely fruitful for everybody, right from politicians to the public. They won't have to worry about voting multiple times. They won't have to worry about the curve of black money. So all of these things are going to be taken into account. As of now, we are given to understand, even the Ramnath Kovind's committee had recommended 4 bills to be brought in different formats, because it has constitutional amendments, which means that not only Parliament has passed it by 2/3 majority, but even 50% assemblies also have to clear it. It's going to be one comprehensive bill that the government has brought in. And this is something which the Prime Minister has advocated on multiple occasions. And on various political platforms also, the Home Minister had, in fact, indicated to people that this is going to become a reality before 2029.
Okay. All right, Payal, thank you very much. Important development. And let's see the bill making its way through Parliament. Thank you for joining in with that context. Let's quickly move on, get back to the markets. We have, as promised, Abhiram Elswarupu, Head of India Equity at BNP Paribas, joining in. Abhiram, good to have you in. And it's been a very eventful year that's finally winding down. But as we get into the final phase of the year, growth concerns, that's the big debate here in India. Not just the FMCG space, but overall growth. What have you made of the chatter around this? And as of now, what is portfolio positioning, specifically with respect to some of these areas where the concerns are, consumer stocks, staples, etc.?
Sure. Thank you, Surabhi, for having me here. If I take the overall picture in terms of growth, we started off the year talking about relatively weak rural consumption, and we're ending the year talking about urban consumption also being relatively slow now. Now, if you see, one of the ways to kind of gauge this is looking at GDP growth, and we see the first quarter wasn't very good. Second quarter improved slightly, and yet we're probably averaging something like 6% growth for the first half. But looking at the projections for the rest of the year, and that we will end somewhere in the mid-sixes, naturally calls for an improvement from here on. So overall, urban consumption is a concern. I expect some of it to ease off towards the second half of the year. Now, in terms of portfolio positioning, and I think I have mentioned this to you in the past as well, we are underweight consumer staples. We think those concerns will remain. Now, some raw material pressures also building. Growth has generally been weak. Some aspects of consumption, however, are not that bad. For example, if you see some parts of durables, for example, which are related to construction, let's say, cables and wires, those kind of segments are still okay. But if you have to take a broad view on consumer, it's not exactly the greatest space at the moment.
Abhiram, hi, afternoon. I know you've been bullish on IT, and every time you come, we talk about it. Now, the question is, at what point does IT become fairly valued because of the kind of run-up that we've seen in IT stocks?
Yeah. If you look at IT stocks, I think they've kind of marginally outperformed the index, maybe about 7-8% over the index year to date. I'm not particularly surprised, but here's the picture. We've got to think of what may happen in the next 3 to 6 months. In the US, and which is the biggest segment for all of them, geographically speaking, you will probably have a rate cut before the end of the year. Usually, rate cuts are followed by improving PMIs in the US, and improving PMIs tend to reflect in better revenue growth. So I would think that the catalysts for growth still continue. Some of the more high-frequency data, if you see, I think financial services has been doing rather well. And some of the deal trackers that we do suggest that retail and CPG may also pick up. So I would think overall that it still pays to remain positive on IT services. In terms of valuation, look, at the end of the day, we're also taking a relative call on the market. Right? The market as a whole is expensive compared to its history at 20 and a half times maybe forward earnings. And in that context, valuation is less of the concern and more about where is the next positive trigger from? And I would think in IT, you still have some positive left.
I'm just coming to you. Let's pull up Gokuldas exports. And if you can pull up a 1-year chart, maybe 1 or 2 year chart, it's finally starting to see a bit of a breakout. So 2023 was a very good year for Gokuldas exports. Stock went from about 400 levels to $1,000 in December of 2023. And then 2024 has been absolutely flat. Before, the move started 3 days back. And it's now, about 100 rupees up for the year. So we'll see. Actually, it's not just Gokuldas exports. Look at something like Indo Count, KPR Mills. I'm not sure there is any specific news flow, but across the board, there are, at least on charts, some breakouts, etc., visible. Feedback from apparel makers has been good, especially those who supply to large sort of chains in the US that, demand has been booked out for the next couple of months. So that perhaps is one reason, especially for the apparel guys. Abhiram, do you have coverage on any of these names or allied names here?
Unfortunately not on textile manufacturers, but I would say one thing on exports as a whole. Take a look at the outperformers of the year actually include both IT services and pharmaceuticals. So export stories overall have done well. And in situations where you can talk about, multi-year demand shortages, or like you mentioned, demand has been booked out for a long time. Take a look at, for example, transformers and some power equipment areas. So where there's a strong multi-year demand tailwind, stocks have started to do quite well. Overall, I think export-oriented companies have done well this year.
Do you have coverage? Which ones do you have coverage on? Power and transformers?
We do look at the space in general, yes.
Abhiram, any of the new IPOs which are, open now? You had Suraksha recently. Vishal Megamart is a big one. MobiKwik has been fully subscribed, I think, already. I mean, very strong subscription already on day 2. Today there's IKS Health. Any of these IPOs catch your attention?
I mean, obviously, I won't comment on a specific single IPO, but what I would say is that in general, IPOs have made a pretty strong comeback over the past month or so. If you see for the initial part of the year, it was much more around, block trades and so on and so forth. And off late, IPOs have come back. And to be fair, in general, the subscription levels have been surprisingly good. And a lot of it being driven by domestic money. Take a look at overall domestic flows this year, crossing 60 billion maybe. It's kind of totally unexpected, well beyond any number that we've seen through history. And there's no reason to expect that they won't remain strong next year as well. 16 billion, even if it goes down somewhat, will still be healthy enough to support IPOs. So I think that in general, new exciting companies are coming to the market, and I would expect this trend to continue to the first half of next year.
Okay, all right. We'll leave it there, Abhiram. Thank you very much for your time. Good speaking with you. Appreciate it as always here on CNBC-TV18. So that's Abhiram from BNP with Perspective. We'll take a break. We'll come back. What's happening in dealing rooms? Nimesh joins in for D Street Chatter. We'll tell you what's the buzz and what are the stocks which are on Nimesh's radar. Our technical calls, near-term technical calls also coming up after that.
Okay, well, let's move on and bring you all the D Street chatter of the day. We have Nimesh joining in as always. Nimesh, slight pressure on the market and of course expiry related volatility. But what's the buzz out there?
Well, while as you rightly pointed out, it actually is at day's low, but the institutional activity seems to be on a lower side. The buy-side ratio is close to 1:1, so there is not aggressive selling, is what at least I can understand from as far as flows are concerned. From a sector point of view, technology and cement is where some of the buying interest seems to be from the larger institutions, so that's the space to watch out for. Surprisingly, the broader markets have given up some of the gains in today's market. It looks like it's more of a profit booking day in the broader markets, especially after a recent up move in many of those broader market and mid-cap stocks. So that's to watch out there. Technically, again, I've been saying for a while now that, for a meaningful downside, the Nifty has to close below 24,300, 23,350 level. So that's a level to watch on the downside. But I guess today it's a low activity day. The volumes are slightly lower and looks like there is a bit of profit booking in broader markets today.
All right, I mean, that's essentially the overall picture. Nimesh, what about individual names? What's on your list?
Well, Prashant, so in terms of individual stocks, the first stock on my list is Paytm. That's been a big mover in the last couple of days. The volumes have actually picked up of late as well. A couple of developments in Paytm to watch out for. One, there is a very strong indication that there could be a potential tie-up with a leading NBFC. So that's one thing. And two, the expectation is that maybe you'll hear a cap on the industry players as far as the UPI activity is concerned, and that could be a big trigger as far as Paytm is concerned. So that's the reason why we've seen a big outperformance in Paytm in the last couple of days. The second stock is Nectar Life, a small stock we don't talk too much about, but that's been hitting upper circuits for the last couple of days, essentially because I understand the clean-out trade from a PE investor is largely done with. Even yesterday there was very large volumes of over 2 crore shares, so looks like that selling is finally over now. The third stock is Credo Brands Marketing, the Mufti brand. While the stock has been consolidating of late, the indication is that maybe there is going to be a clean-out trade from a strategic investor very soon. So that's something to track there. And the last is Sirma SGS, again EMS company. While the stock has recovered from the recent lows after the Q2 earnings disappointment, but again the indication is maybe there could be a potential tie-up for a large order win for Sirma very soon.
Okay, all right. Interesting list. Sirma and Paytm we speak about regularly, but Credo Brands, Mufti, and Nectar Life we don't as often. But these are the 4 names which Nimesh has on his list today. So, Nimesh, thanks very much for that. Let's get some sort of short-term trading ideas now. And we have Nagraj Shetty back with us. Nagraj, good afternoon again. What do you have?
Hi, Prashant. Good afternoon. Nothing has changed for the Nifty. It's continued with the range-bound action with weak bias. Nothing has changed in the broader market index as well. After showing a sharp up move of 12, 13 sessions, they have showed some consolidation, minor dip seen. And I think I'm continuing with the stocks that as discussed in the earlier BDL currently trading around 1228, 1230 levels. I'm stick with the target of around the 1300 levels. One can look for a short term, it is for a BTST or a short term momentum play. And this Anand Raj which has bounced back, currently trading around slightly lower after my discussion around 750 to 753 levels. I'm still with the target of around 810 in the short term. These are the two stocks from two picks from my side for the momentum play in the near term.
Thank you very much for that, maintaining the bullishness on these two names. But companies are on a fundraising spree, and there are many of them who are looking to raise money in the next 2 weeks. Abhishek is here with the details on the same. Abhishek.
Well, Rima, to begin with, Zaggle may launch its QIP soon. So sources tell CNBC-TV18 that company is likely to launch a rupees 950 crore QIP in the next 2 weeks or by 2 weeks. So QIP is likely to see an equity dilution of about 15 to 16%, which may be priced around 500 to 520 per share. Now, sources also do tell us that, they began the talk of having a QIP in the mid of November when, the price was around 400 to 450 per share. Then the demand was really good, and now the price has increased in the last 1 month by 20%. So the demand needs to be seen. That is what the feedback is from the BRLMs. So fundraise is likely to be for inorganic opportunity as well for Zaggle and strategic investments. So BRLM to the issue is Motilal Oswal as well as Kotak Securities. Just to alert our viewers, Zaggle had taken a board approval for a fundraise of 950 crore on 30th of October 2024. Now, Gravita India may launch QIP very soon. So, sources do tell CNBC-TV18 that a company is likely to float 1,000 crore QIP next week. It might happen on Monday. So, QIP is likely to see an equity dilution of 7%, priced at about near about 2,100 per share, which is at a discount to current market price. The BRLM are Motilal Oswal and Kotak Securities. Just to alert our viewers, Gravita has a board approval for raising up to 1,000 crore of fundraise on 4th of October 2024 that they had taken from their board. Back to you.
Thank you very much for that. Let's also focus on the big block deals that happened. One of them was Nuvama Wealth, where 8.4% stake amounting to 2,100 crore changed hands. Vamakshi is here with the details. Vamakshi.
Well, that's right, Rima. There was a block deal today on Nuvama Wealth Management. 30 lakh shares that represent 8.4% equity changed hands at 7,025 rupees per share. Edel Finance and ECAP Equities are the likely sellers, and this is likely to be a clean-out trade. Keep in mind that they had sold nearly 6.2% stake back in September, and this stake sale is now a clean-out trade for them. So that is the reason why Nuvama Wealth is under pressure. But on the flip side, Edelweiss Financial Services is surging higher in the trading session today, and that is because ECAP Equities and Edel Finance are subsidiaries of the company, so they will get some of the proceeds and which will be utilized in the company. But apart from that, keep in mind that the company earlier on December 5th as well had announced that EAAA India Alternatives, which is a wholly owned subsidiary, had filed its DRHP with SEBI for an IPO, and this IPO is expected to comprise of an offer for sale of nearly 1,500 crores. So the intention behind both of these stake sales, the company had highlighted in the past and continues to maintain the same, is that they want to bring down the debt on the balance sheet. Now, debt profile as on September 30th, 2024 stood at 11,810 crores, out of which the corporate debt stood at 5,480 crores, and they're focusing on bringing this corporate debt down. Now, they've also highlighted their plan for the next 2 years. So, through stake sale in EAAA, they intend to bring down the net debt to 4,300 crores by September 25, and they also are looking to sell their stake in the mutual fund business and bring the debt down further to 3,200 crores by September 2026. Largely, they're strengthening the balance sheet, and therefore this bodes well for the company, and that is the reason why Edelweiss Financial is up in trade.
All right, Vamakshi, thank you very much for that. Actually, we spoke with Edelweiss's Rashesh Shah earlier. He confirmed, of course, this particular block. And he also spoke about future prospects for Edelweiss. Remember, they've got a large ARC business in which also Edelweiss is going to dilute stake via, I think, an IPO. Listen to what Rashesh said.
Nuvama is still, a lot of the Nuvama shares are still held by the Edelweiss shareholders. If you remember, we had distributed 30% of Nuvama shares to the Edelweiss shareholders. So the Edelweiss shareholders are still fairly invested in Nuvama. Me and my family, my entire extended family and all, which are all shareholders, we got shares in Nuvama in pro rata share of our holding in Edelweiss. So we own about 24% in Edelweiss. So out of the 30% which was given to the Edelweiss shareholders, we got the pro rata on that. Out of which we keep on, managing that as an investment portfolio. So that is what we got in the original demerger. For Edelweiss, out of this money that comes, a large part will go towards repayment of debt. We have almost half the debt at Edelweiss Financial Services. And as you know, we have also announced that we are going to sell a stake in a mutual fund and we are IPOing our EAAA, which will also give us more liquidity and capital to reduce the debt even further. Collectively, if we get between 3,000 to 4,000 crore, and as I said, our current debt will fall below 5,000 crore, that in the next 1 year, we'll get close to, under 1,000 crores of debt is what we are aiming for, what we are hoping for. There is a secular trend up, not just for Nuvama, but for wealth management companies, for asset management companies. I think India is at that crossover stage where, being a very bank-dependent financial services country, we have become bank plus capital markets.
Okay, that was Rashesh Shah earlier talking about the big block trade that's happened in Nuvama, in which Edelweiss has sold out all of its existing stake. Well, on that note, we do have to take a very quick break. But as we do that, here's some good news for you viewers. India Business News Leader is now a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates as well at your fingertips. You can download the CNBC TV18 app now from the Apple Store or from Google Play.
Welcome back. As we count down to the close, let's get you some opinion. Manish Shokhani, Director of Enam Holdings, talking about the new RBI governor and what this means for the Indian markets.
The new governor, of course, he comes from the finance ministry, very well-regarded person. And I don't think markets expecting any surprises from him. He's a very steady and a detail-oriented person. And in terms of rate cut, they've already signaled that it's unlikely to have any move before the union budget, which is due in February. So while liquidity was very tight in India, the outgoing governor had already released liquidity by cutting what they call cash reserve ratios to infuse liquidity into the market. Also, the government, which had been very, very fiscally tight for the first half of this year due to elections and other reasons such as inflation, they've come back with their spending in the second half of the year, which has just started from October. And therefore, the numbers that you saw for the Indian economy slowing down are expected to actually start reviving this quarter and peak in Q4. I mean, we are all, bullish investors, and everyone wants, cheaper rates. And indeed, the finance minister as well as the commerce minister publicly had asked for lower rates. In fact, the commerce minister expressed his personal view, saying that, vegetable and food prices really shouldn't be part of the monetary inflation targeting regime, and they should probably focus on core inflation, because whatever you do to interest rates, it's not really going to change the price of onions and potatoes. But within the framework that the RBI has to follow, I mean, when they've announced a band of 4 to 6%, and if they see a 6% inflation print, it's very hard for a governor to be seen to be cutting rates. And there's a monetary policy committee, as you know, in India. And that also voted, I think the vote was 4:2 in favor of continuing the status quo. Mathematically, when you do the inflation, do the year-on-year calculations, as you'll see in the January to March quarter, you'll start seeing much better numbers coming out. Having said that, as Ruchir Sharma very famously says, India has a tendency to disappoint the optimists as well as disappoint the pessimists. So I don't think the 7.5–8% is happening very easily, but equally, I don't think it's a 6–6.5% number which will continue. You'll probably end up in that 6.5–7% kind of GDP range, with say a 4.5% type inflation, which still gives you 11–12% type nominal growth rate, which is really what the economy demands at this point.
Okay, so that was a view coming in from a market veteran. We have Ambarish Baliga joining us on the final leg of the show. Ambarish, thanks for joining in. And, as we're kicking off our chat, the market's down about 90-odd points on the Nifty. I want to start first with the Bajaj Housing, the recent most listing from the Bajaj stable on the financial services side. Today, the anchor lock-in opened up. So therefore, there's pressure. There's just more stock in the market. Would you be a buyer? Any interest in this one?
Good afternoon, Surabhi. Yes, I mean, if you're talking of Bajaj Housing, yes. I mean, we saw extremely good like demand in the IPO, and after that also we have seen the stock performing very well. And now it's corrected because of this anchor unlocking. So I think it should give an opportunity for those who missed out to buy at lower levels. I mean, I'll not be surprised if we see levels of closer to about 126, 128. I think at those levels, it becomes it's a decent buy. Even at 132, 133, one can surely buy. But then, since the pressure is there, I think one can wait for 126, 128.
Amrish, we'll get to your stock call for the day. Before that, just a quick word on Jubilant FoodWorks. The stock has fallen close to about 5%. This is after the company's parent firm, Jubilant Bhartiya Group, signed an agreement to buy 40% stake in Coca-Cola's Indian bottling unit, Hindustan Coca-Cola Beverages, HCCB. And I think the deal, according to reports, is valued at 12,500 crore rupees. How does this impact, a Varun Beverages, for instance? What does it mean for Jubilant FoodWorks?
No, I think the market has not really liked, the figure of close to about 12,000 crores being paid for this acquisition. So I think because of which we have seen that correction. And as far as Varun Beverages is concerned, I don't think it will really make too much of a difference for them because the competition would still remain the same as far as Hindustan is concerned. But I think, one should be a bit bothered about possible changes in GST. Where we're talking, where we've been hearing of that 35% slab for these soft drinks. I think that can hit to a certain extent. At the same time, we have seen that Reliance Retail also has gone on overdrive with those old renowned brands like Campa. I think over a period of time, that would also add to the competition as far as these two players are concerned.
Okay, and JSW Infra is a stock pick for the day, for the week.
Yeah, Rima. So JSW Infra is the second largest private commercial port operator in India with a capacity of 170 million tons. It operates at about 10 ports, both on the East Coast as well as the West Coast, and they have a liquid storage terminal at UAE. They have been growing through strategic expansions as well as acquisitions. I mean, they recently acquired Navkar Corporation. And if you look at the earnings of Q2, the revenue grew 18%, but the EBITDA rose about 31%. Margins expanded to 59%, which is extremely good for this space. And we have been seeing that expansions have been it's happening across various ports where they're operating. And JSW's target capacity by 2030, we're talking about 400 million tons, which is about 2.5 times the current capacity. So a huge growth will happen from third-party volumes. I mean, currently third-party as well as JSW in-house is, equal. It's like 1:1. I mean, we see that going to possibly 1:3, 1:3.5. The target price for this is about 450, which is about a 50x the EPS for FY26, which I believe it should be about closer to 9 rupees.
Okay, all right. Got that, Amrish. Thanks very much for that. Well, just the final couple of minutes of the day left. And if you talk about the pressure, that it's showing up on a couple of FMCG stocks again. HUL is down about 2–2.5%. Britannia is also on the lower side. Today, of course, we had Godrej Consumer tell us that the issues that they're facing are transitory. But nonetheless, it's been a bleak week for a lot of these FMCG names. Quick check on the FMCG pack. Anything that you would buy here, or would you still stay away till the numbers start getting better, Amrish?
No, in fact, we've seen a decent correction as far as most of the FMCG players are concerned. And one of my picks here would be Dabur. Because whatever said and done, I think we should have possibly another quarter of, lower volumes. I see that picking up possibly from the fourth quarter FY25. So I think it's a decent time to start buying Dabur.
Thank you, Amrish, for joining in. Just closing out today's trading session, and we're ending at 24,550, a cut of 90 points on the Nifty. The sensex ending lower by 250 points at 81,275. It's been a muted session, subdued session. Market slowly grinding down closer to the lower end of the trading range. 0.3, 0.4% gone on the benchmark indices. Mid-caps didn't fare any better. The mid-cap index was down close to about 0.5% with a negative advanced decline ratio. Sectorally, FMCG took a bit of a knock. The FMCG index was down more than 1%. PSUs were weak in trade. The Nifty CPSE index also down close to about 1%. Autos, PSU banks, realty under pressure too. On the way up, it's only IT which stands out, while metals had a flattish session.
Well, okay. Quickly talk about individual movers and shakers on the way down. What took the Nifty down? Couple of names from the PSU space. NTPC, Coal India, BPCL. These are stocks on the red side of the screen. Reliance has had a weak session today. A lot of the banks have not really participated on the upside. So look at, for instance, a Kotak Mahindra Bank today. Check out HDFC Bank, also lower by about 0.25%. So these are some of the weak hands. And then consumer stocks, like we've been discussing. Britannia, 1.5% lower. Tata Consumer, again, 1.5% lower. There is Lever itself, obviously, 2.5% on the downside. And lots of profit taking on auto names. Tata Motors, Maruti, many of these names on the downside of the screen. The upside, some of the larger Adani Group companies like Adani Enterprises had a decent day. Even Ports was up just under 1%. And Bharti Airtel, it seems there's some chatter about these new year 2025 packs and whether the math actually adds up to a bit of a tariff hike or not. But that sort of got Bharti excited, about 1.5% up on that stock as well. All in all, a weak day where large caps and mid caps saw some profit taking. With that, it's a wrap on this edition of Closing Bell. Many thanks for joining us, but do stay tuned. All the action continues. Up next is Markets Forward.